Have you ever looked at your kids' bills and wondered, gosh, I might have to invest more just to survive? Parenting is hard on the wallet, especially if you're sandwiched between your kids and your elderly parents. So how do we grow our wealth while taking care of everyone? Would a parent who works in wealth management and deals with a lot of investment products maybe be better at it than we are? Welcome to Money Hacks, a podcast series by the Business Times, where we explore money managing tips and also how to grow your wealth. I'm Howie Lim. And today, joining us is Timothy Liew. He's the head of investments on the wealth management side at OCBC, and he's a fellow parent. He knows firsthand how volatile markets are. Nothing's compared to a crying toddler, though. So we'll talk about his wealth management career, how he invests, how he plans for his son's future, and how the rest of us in the sandwich generation can stay financially sane. Timothy, welcome to the show.
Thanks, Howie. Thanks for having me. Yeah.
Tell us a bit more about what you do exactly, though.
There are a lot of investment products out there. Okay, so what we do is that we do due diligence and find the best investment products to offer to our clients. And we also make sure that these products are suitable for our clients' needs.
What kind of products exactly are we talking about?
So a lot of it is funds, I think unit trusts or ETFs or managed solutions like robo-advisory. So that's what we look at, yeah.
So you're in your mid-30s.
Late 30s.
You look 12.
I look 12.
So you've already come so far in your mid-30s. Was this always what you wanted to do? Even
Actually,
when you were a kid?
no.
Oh.
Ever since I was a kid, I always wanted to work in a hotel. I've always, when my parents bring me on holidays, I've always liked going on holidays, looking at different hotels, the architecture, how they function. So when I was younger, I always thought I would work in a hotel. But I guess life had other plans for me. So yes, I ended up in wealth management. Started at a global private bank. When I was working there for about 9 years. Then I joined OCBC about 6 years ago.
Let's try a chicken and egg question. Did you start investing first, or did you get into the biz first and then start investing? How did you first get your toes wet?
I started investing in university. Unfortunately, my parents, they're not really financially savvy. So that's why I think it's very important for kids nowadays to basically learn about investing, learn about needs and wants, about budgeting. My parents never taught me all of these. So I only found out about investing and financial literacy in university through my friends to a large extent. And I remember my first investment, okay, fine, I wouldn't really call it my first investment because it was leverage FX trading, which is probably one of the most risky things in the world. So I wouldn't call it investing, but a lot of my friends were doing it back then. And I thought I should try it for the first time. Ended up losing a lot of money. And I realized that it wasn't for me. But I think it taught me a few things, right? Number one is about diversification. It's extremely important. And even if you think you're right, don't put everything into one trade. Trade sizing is very important. Number two, I think it's about also taking a very long-term approach to investing. It's not about making that 400% in one day and then losing it all the next day. And number three is about knowing what to invest in. I think a lot of people do not do their own due diligence and their own research when they invest, and they just listen to their friends, like myself, and I lost everything, right? I think I lost about $5,000 back then. It was a lot of money for a university student, right?
It's a lot of money now.
It's a lot of money now too, I guess. But it's all about doing your own due diligence and doing your own research and never investing in things that you don't understand. Yeah.
So there you were, shirt off your back. What is your personal investment philosophy today then? Are you growth versus wealth, active versus passive, core and satellite, that sort of thing?
Okay, I tend to take a more value-based investing methodology for my personal portfolio. I also take a very long-term kind of view to investing. I'm not trading on a daily basis. I really don't have the time to do that. I think most working adults don't have the time to monitor their portfolio and make 3 trades every day. So I like to take a longer-term approach to things like this. And I have a mix of both passive and active strategies. Obviously, your passive strategies would be your ETF, tracking different indices or indexes. And then your active strategies would be more of your mutual funds or your unit trusts out there that is managed by a professional. So I do have it all, but I always believe in taking a very diversified approach to things.
So what's in your core? What's in your risk?
So my core portfolio is mainly made up of unit trusts and ETFs. Essentially, I almost never sell any of these investments. I only buy and make sure that these are good investments, really holding for more than 10 years kind of time horizon. In my satellite, I have a bit of crypto, but of course, investors need to understand that you can lose it all. And it's only for very aggressive investors. And I also have a bit of private markets, private equity, and private credit. And generally, these are less liquid investments. And in Singapore, it's only available to accredited investors with a longer time horizon. So that's how I break it down, my core versus satellite portfolio.
But if you already call yourself like a long-term investor, why would you bother with the riskier stuff? Because they call it putting in play money, right? You're willing to lose it, so to speak.
Correct.
Yeah.
Yeah. So basically, when I say I'm a long-term investor, it's not that I want to lose it all, but I think a lot of these instruments, like crypto, you do not really know the upside or the downside. To me, when I'm 60 years old, my crypto portfolio, which is very, very small allocation of my total wealth,
5%?
Less than 5%. It's around 2% for myself
That's very
personally.
conservative.
Yeah, exactly. It either goes down to zero, or I can take 1 or 2 more holidays every year. So that's how I see it. Yeah.
What are some of the other biggest lessons you learned from, say, your friends whom you now know you shouldn't follow, and then also from your role at what you do now?
Leverage FX trading, yeah, that was definitely quite a big lesson. But I remember about 10 years ago, my parents actually dragged me to this investment seminar where they will...
Why air quotes?
I'll explain, right?
Okay.
And so basically, I went to this investment seminar and they were selling lumber in Malaysia as an investment strategy. They said, for the first 5 years, you couldn't take your money out, but after that, you're expecting like 30% returns a year, which just sounds extremely unlikely, right? Yeah. So obviously, if it's too good to be true, it probably is. Obviously, I didn't really understand it. Okay, my parents wanted to invest. I told them not to. I have some friends who did. Turned out to be a scam, right? And so that's where it goes back to. If you don't invest in something that you don't understand, right? Everybody has to do their due diligence.
All right, let's talk about now your role as a parent. So
Okay.
you couldn't convince your parents not to invest in wood. So you as a parent now, it's expensive to raise kids these days. We do know that. How has parenting changed the way you approach investing though?
It has not really changed the way I approach investing, but I think what I did when my kid was born was that I set up an investment portfolio for him.
How old was this kid? 3 days old or something?
I think he was about 6 months old where I set up this portfolio to invest on his behalf. I think a lot of people underestimate the cost of education, especially overseas education. If you go to the US or the UK to do university, it will cost you at least $500,000 Singapore dollars, right? Easily. But based on that, what I did was to set up an investment portfolio for my kid to just give him the option to go overseas if he wants to, right? If he doesn't, then I guess I'll have a nicer retirement with the rest of the money. But at least to give him the option. So he's 4 years old. This year, it's probably another 16 years that I have for investment horizon to get that amount of money.
Did you prepare yourself financially, let's say, for having a child, and then also for your own retirement at the same time? Because a lot of people feel as though kids will be their retirement, right? My kid's going to take care of me, and then so I don't have to think about that aspect anymore. Did you prepare though?
I did. I would like to say that I could have prepared more, but I tried my best to prepare. Essentially, what I did was to set aside a budget. Initially, my wife and I thought maybe it would cost $1,000 more a month, right, to raise a kid. We were wrong. I think it's a lot more than that.
Yep.
Especially before having a kid, all the gynae visits, basically all the furniture that you have to buy. And then my wife and I didn't have a helper, but once my kid was born, we got a helper. So there's like extra $700 every month that's out the window. And then there's school, there's enrichment classes. And so basically it all adds up, right? Even the holidays, you got to book an extra room, an extra plane ticket, and stuff like that for the kid. But I think it's also very important that parents remind ourselves that we also have to save for retirement. Because to a large extent, I think a lot of us are in this sandwich generation where we have to support our parents and we have to support our children, right? And I think most parents, I'm also guilty, that we want to provide the best for our children and we always spend a little bit more than we can afford to, I think, for most of us, without saving for our own retirement. So I think it's also very important to save for your retirement, spend within our means. I mean, my kid is taking piano lessons, okay? And obviously I could have bought him a cheaper keyboard or a grand piano, right? And so the question is about how do we spend within our means and how do we break the cycle? Because I think it's also very important to break the cycle for the sandwich generation and not expect our children to take care of us, because if not, they will be in the next sandwich generation.
For ones of us who maybe didn't have the luxury or didn't have the foresight to plan so well, what's it like? What would you advise us to do?
So budgeting is so important. I see some parents who basically tell me, they need to support their parents, they need to support their kids, they need to plan for retirement, and then you see them going to the Maldives every year, right? So it's about spending within your means. It's about making sacrifices when you have to. Does your kid need that new PlayStation 5 or the PlayStation 6 every year? Do you need a new iPhone every year, right? So it's all about trade-offs and needs and wants.
Right. So we can't talk about investing, though, without talking about volatility. But the thing is, right, market uncertainty, volatility, it's always uncertain, always volatile, is it not? But does it worry you? And what advice do you have for us regular Joes who just often have these knee-jerk reactions and the market's doing bad, escape, get out, that sort of thing?
Volatility is not always negative, because volatility goes both ways. Volatility, you can lose money, you can also make a lot of money in volatility. Yeah. And to me, it's as long as you take a long-term view towards your investment portfolio, you're not too worried if it drops 5% over a week or whatnot. I'm looking at your expression, right? But
the risk averse. Sorry, please continue.
Yeah, so you just need to take a long-term view. If you are the type of person that checks their investment portfolio 5 times a day, then you probably need to invest in something a little bit less risky, maybe more of bonds, fixed income, stuff like that. Stay away from equity markets.
Yeah, but some of us have already done that. Still check the account every
day.
Other hour, maybe. So, all right, I'm thinking that's going to be one money hack you can tell people, which is to don't look at it all the time, because then the eye bags, right? So what are some other, handy money hacks you have for us, for people in the sandwich generation like us?
So I know I sound like a broken record, but I always talk about diversification, right? Whether it's across bonds, equities, private markets, crypto, real estate, or whatnot. But I always believe in a diversified portfolio because to a large extent, a lot of these investments have not a very strong correlation when it comes to investment returns. So usually when one asset class does better, another asset class might not do better. And so that's why you get a bit of a hedge for the portfolio. Taking a very long-term view to investments. I think that most people don't have the time or the bandwidth to look at their portfolio and place 5 trades a day. So people shouldn't do that. They should focus on their jobs and other things and their family. And to a large extent, maybe do a portfolio review maybe once every 6 months. or at least once a year, not looking at their portfolio every hour, right? Because that's not investing. To me, that's like speculation. And then finally, it's always about knowing what you're investing in. Don't buy things that you have no idea. Right? Because risk management is equally as important as making returns. You can make a lot of money, but if your risk management is poor and you invest in the wrong things, you can lose it all overnight, right? And you spend so many years building up this investment portfolio to lose it all overnight. To me, that's just it's just sad.
Yeah. What mistakes do you still see your peers making, though, in this generation most frequently? You've got new friends,
yeah,
so you've lost the ones from the university who made you invest in FX.
I think everybody is looking to get rich quick, right? That's what I notice, especially in this generation. I think a lot of people do not want to put in the work, or they do not take a long-term view on certain things. Everybody just wants to get rich quick through crypto, through high-risk investments, and obviously that's not the way it works. I think real investing is boring, is slow, okay? And it's not about making that 5x in one day, investing in some meme coin. Yeah.
Finally, one trade or one investment idea you think we should be keeping an eye on? Is it maybe AI? I don't feel it's crypto. Do you think it's maybe AI?
I don't think it's crypto, and I don't think it's AI. I think if you look at valuations for in the AI space today, it's extremely high. I think,
but looks good, right? That's what attracts people.
It looks good.
I mean, Nvidia at 5 trillion is eye-watering. They call it. I don't even know how many zeros that is.
Yes, I think that there's a tendency for a lot of investors to basically chase the hype. But ultimately, I look at it more from a fundamental approach. It's not just about the hype. Anybody can chase the hype, right? But the way I see it is that the next big theme to me is healthcare. I think that next year, Singapore is going to be a super-aged population. And I think by 2030, 1 in 4 Singaporeans are going to be above the age of 65. And so with that, people are living longer. And the requirements and the demands on the healthcare system is going to be a lot more. And this trend is not just in Singapore, right? This trend is basically a global trend. People are living longer. So I think that especially in the healthcare space, there's going to be a lot more need and demand for healthcare globally. So I think that's why healthcare stocks will do well in the long run.
I wish we had more time, Timothy. It's been a real pleasure. And thank you for being so candid.
Of course. The pleasure is mine. Thank you for having me.
A big thank you to Timothy Liew. He's the Head of Investments, Wealth Management at OCBC. I'm Howie Lim. This has been Money Hacks by the Business Times.